Hi, good morning, everybody, and welcome to our Wednesday morning trading session, where today we're going to be talking about order types. So you have me at your disposal, once again, Ian Giffen, on behalf of the GoPro Trading Academy. So while you do have me, please remember you've got a chat box there. You're welcome to ask me any questions. If you are watching this as a recording, either in Facebook, on YouTube, and you have a question, just pop it into the comments below. All right, so order types, why is this a thing? Well, first of all, most people don't actually understand the ramifications behind using the different order types. There are advantages and disadvantages to all of them. So we're going to chat a little bit about that first of all, just so that you can understand how they work better and what that means for you. And then having done that, we'll move on to looking at different ways of using them and actually placing orders. Now, I know that that's quite a basic topic, but nevertheless, I think for people who attend our Wednesday morning training, many of you may well find that useful as well. But to start off, let's talk about the types themselves. Let me just bring up an order ticket. All right, so when we talk about order types, most people will think about the difference mainly between order types is the biggest differences anyway between a market execution, which is an instant execution of a trade, as opposed to pending. And if you look at the standard MT4 order ticket here, you'll notice that that is exactly what they have under type, market execution and pending order. Now, having said that, that's not strictly correct, even though from a practical point of view, it's important that they have it that way. It makes life easier. But in concept, that's not where the main difference lies. In actual fact, if we were to look now at pending orders, and you'll remember that market execution is on its own. If we look at pending orders, you need to understand that stop orders are much more different from limit orders than they are from market execution. Okay, so uh, if you are looking at a stop order, using a stop order, you are using an order type that is much more closely related to market execution than a limit order. In actual fact, as you will see, stop orders become market execution orders when price reaches that level. So what does that mean for us? Well, first of all, a market execution, as you know, is an instruction to the broker to execute as soon as possible. But what most people don't fully understand, and if you read your broker agreement, you might understand it better. And it's very important that you read your broker agreement in the context of what I'm talking about here. When you execute a market order or at market order or market execution order, what you are doing is you're saying to your broker, please get me into the market at the best price possible as soon as you can. When I say get you into the market, that is actually also true for getting you out of the market. So if you close a trade down manually, it's in fact exactly the same thing. So very often when I talk about entering the market, the same will also be true for exiting the market. So if you are doing a market execution, you are leaving the instruction very open-ended for your broker to execute. There's no limitation except insofar as they will do their best. So what that can lead to is a phenomenon called slippage. Now, slippage is simply when the broker gets around to executing your order at a slightly different price than what you requested. In principle, that can work both ways. It can work in your favor or against you, but that really depends on whether you've got a broker that's on your side or not. And uh, especially if you guys are Academy members, I trust you've been through our very comprehensive broker selection guide, because within that is all the knowledge you need to know in order to determine whether your broker is actually on your side or is acting against you. And the fact of the matter is most retail brokers are acting against you. And that's not me saying that. It's the financial services Commission or the FSCA in South Africa, but also in the UK, the regulatory authorities have always made clear that they know that most retail brokers are in fact acting against the interests of their clients. But that's a whole nother story. Please make sure that you do go into the broker selection guide if you haven't done so already. And remember, if you are not yet an Academy member, you can sign up for a trial membership for a very nominal sum where you will have access to that as a free bonus. All right, so coming back to the question of the orders again, remember, market execution is open-ended. The broker, depending on how good they are, will settle your order at the best price they can as soon as possible. So just remember that that depends heavily on how good a broker they are, how much liquidity they have access to. All right, so as I say, a stop order is very closely related to a market execution order. The only difference is that you can place a stop order obviously at a price level that's different from where the market currently is. In fact, it needs to be. So all you're doing is you're saying, look, I want to have a market execution order, but not at current price. Now, the way the market works is that you will only be able to get a worse price than where you're currently at. So if you are wanting to go long, you want to buy this market, then you will only be able to place a buy stop order at a less favorable price. In other words, a more expensive price, which if it's a buy order would be a higher price than where the market currently is. You will notice on the MT4 standard order ticket that it doesn't stop you from trying to do that when it brings up the options. However, if I was to select buy stop and put in place a price that was above current market price, so let's say I don't know, 96,300, just to be on the same side, it won't actually let me do that. Oh, actually, I beg your pardon. I actually said it in exactly the right place. So I will delete that in a second. That's the joy of it. If I'm going long, it will only let me do it at a higher price, won't it? So that's obviously the way you should be doing a buy stop. So if we go back to new order, and I then illustrate what you're not allowed to do, which would be, let's say, 95,500, and we'll go back to pending order. Buy stop, but now we place it below current market price, which is where you are not allowed to execute an order. Let's say 95. So you can see it there. And I try and place that order, it's going to bring an invalid SL or TP. It's actually not a stop loss or take profit that's invalid. It's the original order that's invalid in this case. So that's just a standard message. But in any case, I'm sure you guys, once you start using MT4, have seen that message very often. And the same will apply to our take profits or stop losses. They do need to be on the right side of a trade. So if you're trying to go long with a buy order and you place your take profits below that buy order, clearly that's an invalid take profit. Likewise, vice versa for a stop loss. All right, so that's a brief discussion around these. What I'd just like to do, in fact, now is get rid of both of these. And you'll see, oh, we definitely don't want to do that. Let's need to close that down. Very easy to delete an order. Just click on the X, delete. That's the first one. Okay, both of them are gone. So that's awesome. All right. Now, that is the discussion around stop orders in terms of entries, but the same applies to your stop loss. A lot of people think that the stop loss is called that because it stops your losses. Well, it's actually not the case. It's a stop order that will in fact be executed when you are in a loss-making position. So if you have gone long and you've bought the market with whatever kind of order, but nevertheless you're in a live trade where you have bought, that means that your stop loss will be a sell stop order. Now, instead of getting you into the market, of course, now it's going to be getting you out of the market, but it is still, nevertheless, it will work exactly the same way as an entry order. So when price gets down to that level, it converts into a sell market execution, which again, as you will recall from what I said just now with market execution orders, is completely open-ended. There is no limitation on what the broker can do for you. Obviously, they will do their best if they're considering that they are providing you with a service, but they will they have no obligation to settle your order at the specific price that you asked for, and that is very, very important to realize. Now, that can also have extreme ramifications when we have gaps in liquidity. The best example I like to quote always is what happened with the Euro Swiss franc in January 2015. Awfully long time ago, all of a sudden, 6 years ago, even though it doesn't feel like it. But where we had one-sided liquidity on that instrument, and the markets gapped, in fact, across multiple, or price gapped across multiple markets, in fact. But the worst was the Euro Swiss franc, where there was a gap on even good brokers of around 600 pips, when the average daily trading range on that currency pair had been less than 10 pips in the run up to that event. So highly correlated trading up until that point. But then the market gap literally over 600 pips, and in fact closed down at the end of that trading day over 2,000 pips from where it opened. So that was a really crazy day. But in any case, a lot of traders were completely wiped out by that event. Folks who were trading the bounce off the 120 level on the Euro Swiss franc, because the Swiss National Bank was defending that level, assumed that their stop loss placed, let's say, 5 pips below the 120 level was going to be honored. But there was no liquidity below that level. So as price started dropping, all of those stop orders were looking to be executed, but unfortunately, there was nothing to execute them against. Which brings me, in fact, to the final type of order that we need to talk about, which is a limit order. So the limit orders are, in fact, quite unique. They are separate. So in terms of recognizing differences in order types, we've said that market execution and stop orders are very closely related. The only difference being that really what a stop order is a pending market execution, whereas a limit order is another baby altogether. And in fact, the name gives it away. By placing a limit order, you are placing limitations on what the broker is allowed to do. So a limit order, however, can only be placed at a better price. So if you want to go long, you can only place a buy limit order below current market price. You can't do it the other way around. So if you're going long, you must place your stop orders above price, current market price, and you must place limit orders below current market price. So what that effectively means, if you're going long, you are expecting the market to retrace somewhat sufficiently as well in order to execute your limit order before then continuing in a long direction. So you are, in fact, taking a trade as the market moves in the opposite direction to the direction in which you will profit. So a lot of people find that quite uncomfortable, and that's part of the cognitive bias called the recency effect. But in actual fact, especially if you are trading a convex strategy, limit orders can be very, very useful. It also means that you avoid paying the spread effectively on the trade. So now what is important to understand here is that all market execution and stop orders are settled against limit orders. Absolutely essential. And again, I discussed this in some detail in our broker selection guide when we talk about market mechanics. So it's the bonus section in the guide. Please make sure that you have read that. I know it goes into quite a lot of depth about how the market works, but if you're serious about being a professional trader, these are things that you really should understand and it doesn't take you more than a few hours to assimilate that. But it is really important to understand that our stop and market execution trades are settled against limit orders. If there is no limit order at the level that you asked for when the broker gets round to settling your trade, because you must remember your orders are in a queue, then they will find the next best price at which to settle it. Now, if it's a limit order, obviously that means it must be a better price because you've placed that limitation on the broker. All right, so but that is only possible because limit orders are what are used to settle against market execution and stop orders. Now, what that effectively means, and this is a very important point, is that liquidity is provided by limit orders. And liquidity is extracted from the market through the use of stop and market execution orders. So when we talk about liquidity providers, which are the big banks and so on, well, that is all true. But in reality, anyone placing a limit order is in fact a liquidity provider. And that could be you too. The limit order that you will most often be using is in fact your take profit. And that should make sense as well. So remember, your stop loss is a stop order, and as it should be. Your take profit is a limit order. And of course, that makes sense because you're saying to your broker, I want to get out of this trade at this price or better. So they can't execute your take profit order until price gets to that level and they're able to do it at that level or better. If they can't, then the order will stay on the table. Okay, so it won't actually be executed. But remember, they are executing market execution and stop orders against your limit order, and that includes your take profit. So what's very interesting about this now is that this is where our price action phenomenon called support and resistance comes from. And that is, in fact, going to be the topic for a trading session, possibly next week, Wednesday, where I will be talking to you guys about where support resistance comes from and conversely, how price moves. So in actual fact, a better way to put this is how price moves or how price doesn't move. So support and resistance is, in fact, formed through deep bands of limit orders. So that's all very interesting, but it is a topic on its own. Right. So hopefully, guys, it has enlightened you a little bit more about the order types. We get three categories, which is market execution, limit, and stop. And obviously, those can all be done in buy or sell directions. You could also classify pending versus instantaneous, but to be honest with you, that's less useful than what I've described to you, where it's much more important to class market execution orders together with stop orders and recognize that limit orders are in a league of their own, if you like, and that they, in fact, are the provision of liquidity. It is how liquidity is provided into the market. It's through limit orders, and liquidity is extracted from the market through stop and market execution orders. All right, so the next thing I want to talk about then is how do we actually execute these? I touched on it briefly in our MT4 training last week, but I'm going to go into that in a little bit more detail in a second. Before I do that, I've got a couple of questions that just want to answer quickly. Moon is asking, was the Aussie CAD taken by an impulse strategy? I assume so. We know this is not my account. It is one of the funded trader accounts, but it looks pretty much like an H4 impulse to me. So higher time frame selection criteria met on daily, dropping down to H4. And as you know, that there would have been a valid impulse candle for the 4-hour time frame with initial stop on that high. So that certainly looks like a yes to me. So you'd agree with that? All right, a little bit off topic, however. And Peter's asking, is the GoPro PSE pending order always a limit order? No, it's not actually. It's will take the appropriate order type depending on where you are placing it. So going back to what I said a little bit earlier, if you want to buy, then, and if you place the order level, I'm actually going to come and talk about the position size calculator in a second, but if your entry level is above current market price, then our trade placer will automatically make it a stop order. And vice versa, obviously. So if it's below current price and it's a buy, it will automatically make it a limit order. Right. Pino's also asking, I've had a couple of instances where I wasn't able to place a limit order, but able to place a stop order. Hopefully that answers that question. It just depends on which side of the market you are trying to place your order. If you're going short, as in this case, a stop order will always be placed below current price and a limit order will be above current price. I always think about it in terms of what would be a better or worse price. Stop orders are always at a worse price. Limit orders are always at a better price. Perfect. Okay, so let's look at the different ways to do it. I'm going to bring up now the new order standard ticket. I don't recommend that you do this, guys. Okay, I really don't. Now, I'm assuming that you've worked out everything that you need to in terms of your position size and what have you. But that is always the first number that you need to fill out. Always do volume first, which is your position size. Okay, so that is essential, absolutely essential that you do that in the first instance. Okay, after that, you then, again, obviously, if this is a market execution, you must put in at least your stop loss level before you execute the trade. So volume first, stop loss next for market execution trades. And to be honest, once you've placed the order, because if you're doing a market execution, let's face it, you're obviously looking to get in at that moment in time. If you haven't had time to put in your take profit, it doesn't matter. You can come back afterwards and amend the trade in order to make sure that the take profit order is in place. I don't recommend you do that with a stop loss. If you absolutely have to go back and amend your order for the stop as well, you must do so immediately after the trade is placed. And as you guys who are on the funded trader program know, if you take longer than 60 seconds, you will get a warning for the first occasion or so, but it does give them the right to actually shut you down. Remember, it's their money. They're giving you a lot of their money to trade with. So we need to make sure that we are managing risk as actively as possible. So my rule is always put the stop loss level in before you look to execute the trade, and even with orders. All right, so that's market execution. If you wanted to place a pending order, you need to then change the order type to pending, and then select which of those you want to do. So in this case, if we wanted to sell, we would need to choose between sell stop, which would be below current price, or sell limit, which would need to be above current market price, either below or above. And you could then, let's just say sell limit. Once you've selected sell limit, then the next thing you can do is put in the price level that you want. So 0.96 to 100, and you need to do that manually. And as I say, you must have that stop in place as well. 0.96300. Now I'm putting just 100 pips. Sorry, I mean 10 pips difference in there. But if you were doing it like this, then you would also have time generally to put in your take profit. And likewise, if you are going to expire the trade after a certain period, certainly with our generally with our trades that require a pending order, we would have an expiry date and time for that. You should have time to do that now as well. Okay, and I really recommend that you do that up front. For those of you who've done our strategy training, you know that is a very important thing that needs to be done in terms of trade management. Selection, timing, management. This is one of your 3 management tasks. All right, so that would be how you do it. And you just click on place. Once again, if, for instance, this number was less than that number, because remember, this is a sell limit, it would be in the wrong place, and I would get that invalid SL and TP message again. However, if I hit place now, it would place the order, but I don't want to do that. I'm sure you can figure out the rest from there. Okay, so that is the most long-winded way of placing an order. I don't recommend you use that. There are better ways. If you don't have our custom position size calculator for MT4, the next best thing to do is, in fact, to right-click on the chart wherever it is that you want to place a trade. So let's say, and I don't, but let's say I wanted to go long at this exact level. So I would be able to use my crosshair and say, right, I want to go long at 96,501. Let's say it's 50. I'll show you, but it's in the proximate area. All I do is I position my cursor at that price level. And then you'd need to right click twice if you've got your crosshair up. And that will bring up this context menu that we've spoken about in our training many times before. What's useful about this is that, well, first of all, it's going to give you a default option to trade there, but we're not interested in using that. I prefer to actually go down to trading and then select from here. But now you'll notice we're down to 2 options out of 4. At that price level, as I've told you, we can only, because remember, that's above current market price where I right-clicked on the chart. We now only have the option to select a buy stop or a sell limit, which is exactly as I described it to you. So in this case, I would select sell limit. Now it brings up the same kind of order ticket, but everything is now has basically been done for me in terms of selecting the order type. However, we still need to go back to changing our volume or position size, which must always be done first. And then that price there, you will notice, is pretty much where I wanted it. If I wanted to be exactly on 96.5, I can change it manually or use the little arrow buttons. But there it is. So that price, by the way, will also change when I change that. So if I was to change this again, you will notice that market price over here is changed. All right. So not a big deal, but it's something that you just need to always remember, is that you need to double check and correct this level once you have put in your volume first. Then, of course, we'd put in the stop loss next. I'm going to make it 50 pips. And if you want to as well, you'll take profit. So what, we could do as well is I could actually copy these here, and I'll do that just now. But this is obviously just a pretend order. I'm not actually going to execute it because this is someone's live money account. But in any case, we could make this 0.9520, something like that. All right. So that would give us a nice reward to risk ratio as well. Likewise, expiry, you could put that and should put that in here if it is part of your process. And then all you have to do is hit place. If you're trading multiple strategies, just as a quick aside, do yourself a favor and just note down the strategy. You can have your own notation for that. Our trading software, when that does launch, will actually do all of that for you. So you wouldn't even need to worry about any of the stuff. But it is important that you know about it. All right. So that's how you would do it here. If I wanted to go long, it would be the same thing, trading, but now it would be buy stop. And you'll notice it pre-populates everything for me over there. But once again, need to now start with this as per usual and move on from there. You can actually tab through these numbers. Remember, the most important numbers to have in place are you have to have price, but you must also put your stop loss in before you execute the pending order. And also have your expiry time selected there. All right, so those are the 2 methods that you can use, or that I really recommend that you use. There are others. Those are the most obvious ones when using standard MT4 tools. If you are a member at the Academy, and even if you're doing our trial membership, then you will find the download when you do the strategy training for the position size calculator and the trade placer, the companion trade placer that goes hand in hand with that. So how does this work? All right, well, the beauty of this is the calculation of the position size. So I brushed over just now when we were using those order types. Where do you get that number from in order to change the volume? What determines the size of this number? Now, we've done lots of training on working out the position size in the past, and certainly as an Academy member, you should have access to that. But I think it may well be time for us to do training on that again. And by the way, folks, if there's anything that you want me to do training on, I really request that you will send us an email or drop it into the Facebook group. You know, just put it in there as a comment. And Karina, I think we should maybe do a poll on that as well. But please do ask for anything that you want me to do training on. And this is an important thing to know how to do, folks. It's absolutely essential to know how to work out this number. A lot of people, when they start out in their trading journey, make the mistake of thinking that if they make that 0.01, it means they are risking 1% of their account. Nothing could be further from the truth, not at all. That number there bears no or direct relation to the percentage that you are risking. It is not the same number. We do work this number out from the positions, from the percentage that you want to risk on your account. That is true, but it is not the same number at all. The size of this number will depend on several other numbers as well. So first of all, yes, the percentage of your account you want to risk, but also the actual size of your account. So if you've got a $2 million account as opposed to a $2,000 account, this number will be different by a factor of 1,000. Okay, so it will be hugely different. Likewise, if you're risking 0.2% per trade as opposed to 1% per trade, that will be different by a factor of 5. Okay. Also, it depends on the distance between your entry level and your stop level in pips. Those numbers determine that as well. There is a final number as well, depending on how many instruments you're trading. But if you're trading more than just instruments that have got the US dollar as the term currency, then that too will change the factor that's involved in calculating this number. Now, that is all training that is included even in our Complete Trader mini course. It is included in the foundations course. You must make sure that you understand how that works conceptually. Having said that, the beauty of using the position size calculator is it does everything for you. If you don't have our position size calculator, you need to use an online calculator, such as at my FX book. In fact, that would be the one that I'd recommend before any others. Because it pulls in the price for the term currency if it's not a US dollar term currency pair as part of that calculation. It does it automatically. Otherwise, you need to use our position size calculator to work that number out. And part and parcel of that, of course, is putting in the entry level and the stop loss level, the difference between those two numbers being required in order to work out the position size. All right, so you need both of those numbers. You don't need the take profit for that, but it's pretty useful if you're actually going to take a trade. I'm sure you'll agree with me. You also need to ensure that you're using the correct risk percentage. So if I wanted to risk 1% of this account, which is $15,400 odd in terms of equity at the moment, then you'll notice that using at 1% risk, it works out for me. It calculates automatically that in principle, I want to risk $154.15. All right, so that's worked out on the balance. If we actually use 0.99 because it likes to round things down a bit, then that will be the risk that we're taking, bearing in mind that slippage might cause a bit of a difference in that if our broker causes that slippage. It also works out our potential reward and gives us a reward to risk ratio, which is absolutely awesome, 2.21 to 1. And likewise, here is the correct position size based on the account size of $15,415.46, the fact that I want to risk 1%, that my entry is at that level and my stop is at that level. And obviously it will also pull in the exchange rate for the term currency, which in this case is the term currency is the Canadian dollar. So it'll pull in the inverse of the USD CAD. And you won't need to worry about any of that. Once you've done that, assuming that's all right, and by the way, I just want to illustrate, if I change this from 1% to, let's say, 0.2, you'll notice all these other numbers change. Okay, not the reward to risk, because that's determined by these numbers up here, which haven't changed, but it certainly changes the amount to risk, and it certainly changes the position size. So all of that then is done for you using this. Now, coming back to our question on order types, what do we use? Well, the nice thing about this is that you only need to determine whether you're going to be doing an instant execution, which is market execution, or pending. Because depending on where you put your entry number up here, the position size calculator will automatically know whether it is a limit or a stop order. Oh, and by the way, it also knows whether to buy or sell because of the fact that the stop order here is above the entry. If my stop is higher, a higher number than the entry, clearly that means that I'm wanting to short the market. And likewise, the take profit would need to be even lower than that. So the position size calculator figures all of that out, knows what to do. So you can look to see as well whether you've got your order lines are in approximately the correct place. So if I wanted to copy this trade that we've got going at the moment exactly, I'd probably just need to change my my entry level 95953 when it should be 95943. So it's just one pip out. But bearing in mind that it will also know in terms of what the broker will allow and not allow. And now you can see that the blue line for the entry is exactly on top of the entry. The stop, the green line is on top of the stop, and the yellow line is on top of the take profit. So if I unhide them, there you can see that that's exactly right. And of course, to take the trade, then we would just use our hotkey for the position size for the trade placer. I beg your pardon. All right, so that is hopefully has hopefully helped to enlighten you on, first of all, the differences between the order types, and secondly, the different ways that you can actually place orders and execute trades. Right, so any questions? And Pino's asking, I don't ever want to go back to trading without the GoPro position size calculator. Thank you, Pino. I don't blame you. However, when we bring out the trading software in hopefully the near future, you might change your mind about that. Can you copy orders across brokers? You can, in fact, but you need to have separate software for that. Yes, it can be done. That's a whole other story. I haven't done it for quite some time, but yes, it is something that can be done. It's also something that potentially you must understand that we would like to discourage in some ways, especially for folks who are using the funded account. But in principle, I can also understand that there are times where it would be useful, such as when you're doing the challenge, the GoPro trading challenge on a demo account, and you also want to trade your live accounts, and maybe you've got both a funded account and a personal account. So yeah, I understand. Those, by the way, they don't always work perfectly either. You know, it requires really good communication between the brokers using the software. It's something that if you're interested in, I can point you in the right direction. Right, any other questions? Everybody happy? Just going to stop recording.